Hey everybody, sorry for the slight delay. Just taking care of some technological situation on my end, but we got it all resolved here.
My end.
I'll try to be polite.
Yeah, well, no need for that.
So I want to be respectful of everyone's time. So uh, my name is Valerie Saunders. Welcome to this week's Weekly Success Builder. This week we are fortunate enough to have Brian Vieaux, and I'm really excited to hear what the tips he's going to give us to make this week a success. So Brian, thank you so much for joining me. I greatly appreciate it.
Yeah, thanks. Thanks, Valerie. Great to be here. I see some familiar faces and names, so good afternoon to probably at least half of you, and good morning to the rest of you. So, Valerie, you'd reached out. We kind of got this on the calendar, and um, as I thought about what to talk about today, I just want to reflect on conversations that I'm involved with and I'm having literally every day with loan officers, across the country. And I'll preface it by saying most of my conversations are in the context of my company, FinLocker, and our product. And this is not an infomercial, so I'm not even going to get into the product. What I find fascinating is the conversations that we're having that are centered around our product and platform. If you separate the product, these are like real life things that people are dealing with and doing in their business today to maybe not create success immediately, but with an eye on, building next year's success today. And I don't know about you, Val, but I like interaction. So I would encourage anyone and everyone to kind of pipe in as we get going here. I'm not a keynote speaker, so I didn't prepare a speech per se. I'm going to speak from the heart, and from these conversations. So, we are all in the middle of this prolonged cycle, this market that has been stubborn to say the least. It feels like every time we get a few signals that we're going to get some relief, then something else happens, right? And I don't know what rates are going to do. I don't think anybody on this call knows what rates are going to do. And so I tend to have a lot of conversations that are really irrespective and have no bearing on the rates, because we're really not even talking about like, what am I going to do today to get a loan tomorrow? And so the conversations that I've been involved in really have centered on what loan officers are doing in their business today, given the market that we're in, to prepare them for success, whether it's in I'm not going to say Q3 because I think that's like next week, Q4 and Q1 and Q2 of 2026, which is crazy to think about. And something that I focus on a lot is this concept of this pipeline, this balloon, if you will, that keeps getting bigger. And in that balloon are first-time home buyers that have otherwise delayed, put off buying their first home, some by choice on their end, but most dictated by the market, starting with lack of inventory in most markets, or what was a lack of inventory in most markets. And then again, the stubbornness of rates that have created affordability problems. And so what I'm hearing from loan officers is that we are all carrying this pipeline of this cohort of otherwise would-be first-time home buyers who, again, are in this state of not being ready to pull the trigger for various reasons. And so our challenge is, how do we stay meaningfully engaged with that pipeline and add value in such a way that whether it takes them 3 months or 3 years to be ready to buy, that when they do hit that, that point of readiness, that they're thinking of us. And so what I'm seeing people have success with is really leaning in with, being that best source of financial education, financial preparation in their community. And their community is both the physical community that we all live in and serve, but it's also the digital community that we show up in. And if we're not showing up in, we need to show up in, because that's where a lot of this next generation, first time home buyer anyway, is really learning from, is, from um, the digital aspect of us showing up as experts. Um, so let me expand my screen. I'm only seeing a handful of faces. I just want to see if I recognize anybody else here that I can pick on. Good looking group of people, that's for sure. All right. So now that I can see those that are on screen, show of hands, who out there is showing up consistently as a source of education and preparation, specifically for kind of the next gen first time home buyer. There's David, thank you. And David and others, are you showing up physically and digitally? Meaning, are you, showing up where you can in your community, but also showing up intentionally on, on video, on screen, on digital?
So about a month ago, I started doing a weekly rate watch on a video. So we put it out on YouTube, Facebook, LinkedIn, and stuff. And and what I'm doing is I'm not specifically mentioning a rate because that gets complicated.
Yeah.
Just say rates are better, rates are worse. And then what I do is I talk about issues that would relate to first-time home buyers. So for example, sometimes it's I think last week was pre-approval. Should you be pre-approved? So I pick a topic and I do, like, I try to put 3 points. One is, where's the rate this week? One is, what are you supposed to do? And the third is, what do you need to know?
Love that. I know it's been, you've been doing it, what'd you say, like a month, a little bit over a
Yeah.
month? So it's probably too early to tell, but like, what's your early feedback in terms of engagement? Are people responding?
I'm not getting responses, and that's one of my weaknesses. And um what I'm doing is um, one of my people is working on helping me get better engagement on YouTube. So using the keywords and all that kind of stuff.
Yeah.
But on one of the, I'll just go there for a minute. Um, uh, on one of my recent ones, I had like 600 people look at it. So I think that's pretty good engagement. And plus, 50 or so on YouTube. I mean, on Facebook or whatever. Let's see. The last one I did had 164 views, went up on Friday morning. Not bad.
I
Some
mean, look at, if you,
rates of graduate proving had 411. That was 2 weeks ago. Uh, yeah, so I'm getting 200 to 300 views.
the way I think about, we always hear vanity metrics, right? The views and impressions and whatnot. I kind of look at it differently, especially if we're just starting out. We need that positive affirmation that that people are actually seeing it and watching it. And so I kind of think of it this way. And if you were to go set up a seminar, in your local community, we all would like kill to have 100 people in the room to hear us talk about, whatever it is we're talking about. And so that, to me, that's the power of social, is that, we can get in front of audiences. And I'm not a social media expert, guys. I can speak from what I do, running a small technology company in our industry that, has limited capital and limited resources. And so I've been forced to show up a lot more than I've ever had to on social. And so I think about, in the context of my interaction on social, it's B2B. I'm trying to reach folks like yourselves on, on LinkedIn and other platforms. And if I were to go, go around the country and go to conferences, physically go to conferences and stand up in rooms. I would love the opportunity to be in front of 36 people like I am today, sharing some of my experiences. So I think, David, hopefully what you're feeling is, maybe not, you haven't had the interaction directly where people have reached out and responded, and certainly hasn't resulted in a loan application yet, but people are seeing it. And I think what we all have to remember is you have to be consistent, right? So it may take another, 90 days of consistent content that you're putting out there, David, before you get someone to raise their hand and say they want to learn more. But just remember that you got people looking at it and watching it. And now you're probably going to have 36 more people checking you out that just learn that you're putting content out there. But yeah, stay consistent. I love the approach in terms of kind of leading with what's going on with the market and then adding value around, what's important for first-time home buyers. A content idea for folks to think about is I saw a study over the weekend. Bankrate did a study, and somebody from the Mortgage Bankers Association published as like a short little article on the study, and I think I saw somebody else pick it up as well. But the Bankrate study talked about the kind of hidden costs of home ownership, and so many first-time home buyers are hyper focused on what it takes to qualify, like, and specifically if it's somebody that's currently renting and then, is going to buy their first home. They more often than not, and we've done this a lot as an industry, we're probably part of the issue here, but more often than not, people compare kind of the mortgage payment with my current rent payment and assume if I'm within a stone's throw of my rent payment, then I should be good to go in terms of buying this home. And maybe that's true for qualifying, and in a lot of cases it is. What the Bankrate study showed is that outside of the mortgage payment itself, on average, there's like $22,000 annually of other costs of home ownership, right? Insurance, taxes, maintenance, utilities, you name it. And so, and somebody put a comment in there, I'm assuming, thank you, Sylvia. It was a sobering article, great point. I look at those articles as, while sobering, for sure, there's an opportunity for us to show up differently in how we educate our people. And while most loan officers are probably not talking about that total cost of home ownership, imagine if you become that resource in your community that is looking at, a first-time home buyer and really looking at their total cost of owning a home versus what it takes to qualify. Imagine that, delivering sobering information, but delivering it early enough in someone's process where they can now incorporate that thinking into their budgeting and planning. And now you're building trust. I mean, I would be, if David's in my community and I'm a prospective first-time home buyer and he's telling me what's going on with the market, what some of the challenges are that first-time home buyers are facing, how he's helping them, but he's also educating, me on thinking about the holistic cost of owning a home and being part of my planning and budgeting for that. Whether it takes me 6 months, 18 months, or 2 years to get ready, that's who I'm leaning into is David, who's been kind of with me all the way and providing that, real world information. So I thought that was those are the kind of articles I look at, and I think about those are great content for local loan officers to put out in their communities. And you're referencing, we can argue whether Bankrate is reputable or not. I think their data is pretty good. So, but you're referencing, a source of data in this case. You're not having to be the data expert, but you can layer that into how someone should be preparing for home buying. And just to kind of put my money where my mouth is, I wrote an article using that study. I wrote it over the weekend, and it'll be published tomorrow in the Chrisman commentary. So, it's those are the things that I look at on a regular basis and then try to kind of turn that content into content. In my case, writing I'm writing in the Chrisman commentary for the mortgage loan officer community, but you can easily take what I wrote tomorrow and kind of turn that into more of a direct to consumer piece of content. Anyone else that's doing something similar to David in terms of kind of showing up regularly, or maybe just getting started showing up regularly as a kind of source of education for that first-time homebuyer cohort? David, you're rocking and rolling. You own this market. Keep going. I love it.
I do, sorry. I did want to comment. So another good place to go is, I don't know if anybody's ever participated in Freddie Mac's Credit Smart program. But if you have the good fortune to be able to go through the program, once you've completed everything and you've received the certificate, they do give you a lot of materials that you could use, David could use for a future program. You could do home buyer seminars. You could do a whole entire, video series just based off of the materials that they're giving you to really help people get credit ready. And then to also kind of think about things down the road, sort of coming out of those couple studies that Bankrate did of, are you going to regret buying?
Yeah.
I saw, 70% said no, but the fact that, 30% of the people that did buy their first home regretted it. And it's probably just because they didn't think about the maintenance or didn't think about their taxes or insurance going up or, whatever the case may be. That's another good place to go to get info.
I love that. I'll do a selfish plug for First Home IQ. Another great resource. I'm part of their ambassador program. We partnered with them at FinLocker. And so, first of all, their program's great. Their mission is awesome. But if I'm in a loan officer's shoes, that's all great. What's in it for me? I would say similar to what Val said in terms of Freddie Mac's content, another great source of content. If you want to be armed with like what I'll call a modern toolkit for educating early journey first time home buyers, check out First Time Home IQ. There's a lot of people that create a lot of great content. I think they have a good handle on the next generation of home buyers and really have built content that is easy to deliver as a mortgage professional, and gives you a reason to go into your communities, whether it's, church groups or even schools and teach financial literacy. Because it's a good thing to do, help younger people better understand finances and making, decisions that an 18 to 25-year-old makes could impact their ability to buy their first home sometime. But again, I think of it selfishly. If I'm doing that in my community, I'm building my brand in my community as this trusted source of financial education. And instead of being viewed as a loan officer chasing a deal, I'm being viewed as this community first resource of financial education. And yeah, it may be 5 or 6 years before one of those people that you teach becomes ready to buy, but everybody else that's in their circle is going to start to know you as that expert because you're taking the time out of your schedule to lean in with education. So a little bit of plug for First Home IQ. Sorry, Val, I don't know where you guys, if I'm sure
Oh,
you're
no,
aware of those guys.
totally fine. No, I personally had never heard of First Home IQ. I'll look up their website and I'll
Yeah.
drop it in there. And David, yes, I will send you info on the Credit Smart program.
First Home IQ, I'll just say this real quick because there's a couple names you've probably heard of. Dave Savage, I think most of us know Dave Savage as the mortgage coach. He developed or founded the Mortgage Coach product and now is part of Trust Engine. Dave is one of the co-founders of First Home IQ. The executive director and the other co-founder is Kristen Messerly. And Kristen has really become the voice of the next gen home buyer. She publishes an annual report that's called the Next Gen Home Buyer Report. And it's fascinating to look at that. I think she's published 5 years of that report. One of the number one findings from Kristen's 2025, which was really 2024 report, and it also aligns with what we saw in the JD Power 2024 originator satisfaction survey. The number one finding was year over year, the trust of the home buyers that were surveyed in the loan officer lender was down. And so you guys are like, why do you keep throwing these sobering, data points and reports at us? Come on, it's supposed to be uplifting. My first reaction when I saw the JD Power report, and then when I saw Kristen's report kind of as a follow-up, and it signaled that there was a significant drop in trust year over year. My first reaction was kind of feeling bad for us as an industry, but I quickly changed my mindset and put myself in the shoes of each one of you as a local loan officer and said, okay, if the bar is here, it's clearly pretty low. What can I do differently as a loan officer to change the narrative for anybody that comes into my circle, right? And in the case of JD Power, what they noted was that when a lender, and by proxy, it was always the loan officer, when a loan officer engaged the buyer before the point of sale, right? The satisfaction was like 107 points higher than when the loan officer was the first time they met the borrowers when they were taking a loan application. And so this is where I talk a lot about, transitioning from being, a transactional loan officer. And by the way, we still need to be there when someone raises their hand and says, I'm ready to apply, and they've been referred by one of our, partners in our community, one of our agent partners. But what the JD Power study really showed me and told me was, boy, there's a lot of power if if I'm getting to the consumer earlier in their journey and building trust through education and preparation. And again, the JD Power study showed it was like 107 points higher on satisfaction when that consumer was working with that loan officer. And it wasn't like 2 years up the funnel. We're talking like 90 days, 90 days to 6 months, depending on the situation. And Kristen's Next Gen Homebuyer Report said the same thing in a different way. Distrust was a big call out in her report. And then what her report also showed is that this cohort, she interviews 1,000 next gen home buyers every year. Then they're a different cohort every year. This particular cohort really put a lot of value on education and preparation, and also said at the same time how anxious they were as it relates to this process. So I know we're at the top of the hour, but I guess if I could leave you all with one thing is, take a play out of David's playbook. If you're not actively putting yourself out there, again, either physically in your community by showing up at events or digitally or both, better yet, both, do that and lean in heavily as an educator first with no expectation for anything in return. And it's a long game to play, but I think what you'll find and what I see happening is people that are doing that and taking that approach, they're getting a lot of personal satisfaction in their business, but they're also building these longer term relationships that your agents are paying attention to. They're paying attention to that as well. So, Val, I hope I hit the mark on this.
Yes, yes, absolutely. If people want to communicate with you or follow you, post this call, what's the best way to do that?
I will do two things. I just put my email in there, and then I will. Pretty sure I'm the only Brian Vieaux on LinkedIn, at least the way I spell it. And so I'll drop my LinkedIn profile in there, and just feel free to reach out. Love to have any conversations. And David, if you want to brainstorm further, please feel free to reach out.
Awesome. Thank you so much. We really appreciate it. Thanks everybody for participating in today's call. Our next speaker, who I know is somebody that Brian knows, Scott Hudspeth, is on our
Yeah.
call on June 30th at 12:30 p.m. Eastern Time. So as always, I hope everybody makes this week a success. Thanks, and we'll see you next time.
Thank you.